What's up, Trader's Edge? It's Mark Sebastian, your only option. Today, I'm going to wrap up the week it was. I'll talk about what changed on Friday. We'll look at the S&P, the Q, the Russell 2000, and the Dow. We'll talk about volatility. We'll even look at crypto, and I'm going to give you that one stock to watch next week. So with that, let's dig in. So Friday kind of salvaged the week, but as a whole, it was a very rough week for markets, notably Thursday. But really, we came in on Monday down more on Tuesday, a little bit of a tiny rally on Wednesday, an absolute drubbing on Thursday. We'll talk about Thursday a little bit. And then Friday, we did get a partial rebound. Looks a little bit like a doji. Too big of a center, but notice this is the 100-day moving average. That was what was used as a trampoline for markets. And you can see similar patterns in the triple Q. That actually is a doji, and it is sitting just above that 100-day moving average. Q's maybe had a worse week than the S&P. Since the beginning of the month, or really since the Fed, when the triple Q hit a high of 637, the triple Q, even with the rally on Friday, is down $47. That is almost, 7.5%? That is a massive sell-off for, less than a month. Now, we've only had one really bad day. That was Thursday. And again, I'm going to get to that in a second. IWM did not have a doji. It was way below the 100 on Thursday and then absolutely popped on Friday. And again, I'm going to talk about exactly why, but it has to do with interest rates. So, folks, I know the story has been the crypto meltdown and the AI bubble narrative, but the real story has been interest rates. A month ago, Fed Fund futures were pricing in a 98% chance of an interest rate cut by the Fed in December. It had gotten down all the way down to 30% yesterday after all that crazy selling. Traders started to buy Fed Fund futures thinking, hey, if the market keeps getting worse, the Fed's going to have to lower rates. But then Fed Governor Williams, the governor for New York, came out and said, we think rates are going to go lower, and markets and the Fed Fund futures moved from 39% odds to 71% odds in a day. Folks, this is the biggest single day move that I think I've seen on a non-Fed day in Fed Fund futures, maybe ever, but certainly in the last 10 years. So this was a crazy move. And that leading into that, low rates is what was enabling AI. It's what made crypto seem so interesting. It's what really caused everything to rally. And then that rate readjustment that we experienced over the last 3 weeks, that is what caused this selling, this kind of sell everything. I mean, they sold everything. Oil, gold, crypto, stocks, you name it. They were down, and that is because of interest rates. So Friday's jump in rates really sets the market up to be finding a floor. It absolutely sets the market up to be finding a floor. And obviously, IWM is by far the most sensitive to interest rates, and thus it had the best day, up almost 3%. The Qs, where there's still some fear around AI, kind of did the worst. It was up 0.75%. And then you've got the Dow and the S&P up about 1% each. So with that in mind, when you see how markets react, one, I really like small caps next week. Two, I think this again could be a tradable bottom. Certainly in stocks. The one thing that could derail us continues to be crypto, which is off the lows but continues to just die. And there is some real, I believe, mechanical selling in crypto from traders and hedging against crypto trusts like MSTR, which continues to drop. These crypto trusts, I think they're a ticking time bomb. And, it's going to take one of these kind of really blowing up for crypto to completely bottom out. Think what happened with FTX a couple of years ago. But I do think one of these will blow out. Crypto will tank. And then, you might get a 1 or 2 day sell off in markets, but it won't be a big deal. I think the AI narrative is bunk. And I think the AI bubble narrative, at least for now, is bunk. Now, that being said, take a look at NVIDIA. They absolutely destroyed earnings. You can see it's way off the lows, but still down. This is one I'm watching to see if it can rally. If NVIDIA starts to rally Monday and Tuesday, the whole market's going to take off. NVIDIA really is the backbone. It is so heavily a piece of all the major indexes that, we kind of need that one to pop. The other name I'm looking to rally next week, already rallied a little, but I'm looking for more, is Amazon. That thing has just been beaten with a switch. It had to go out back and cut down itself. But now it looks like it may be finding a tradable floor. It's actually sitting at the 150-day moving average and actually touched the 200-day moving average on Friday. I think there's a real tradable bottom there in Amazon, if I'm right. One thing making me feel better about everything is the VIX. Tried to rally today, but it really did get kind of stomped down 2.9 points. The VIX curve still is it's in contango, the curve, but the entire VIX itself, the cash index, is trading above everything. That is a sign that the market is in flux, that we've got to have crazy, wild moves. So we want to see the VIX get back below 20 if we're going to start feeling good about things. So there you have it, folks. You can check out, you want to keep an eye on NVIDIA and keep an eye on Amazon. Those are going to be your key stocks for this week. We do have some economic data, but nothing crazy coming up. So watch those two names. Have a wonderful weekend. Enjoy your weekend. I am Mark Sebastian. I am your only option. Have a great day.